Hello traders, welcome back to this channel. In this video, I'll be teaching you on simple snapper entry strategy. Sit back and let's dive into the video. So we are on 4 hour time frame right now, and then the currency pair I'm using for this video is pounds USD, which is cable. You can also trade this strategy on any pair. The most important thing is for you to understand the strategy, and then I believe after this video you get the full understanding about it. So if you're new to this channel, please kindly subscribe. I really appreciate that. So as I've said earlier, we're on 4 hour time frame right now, and then if you analyze the market, consider price end up breaking this particular high here. Consider price end up breaking this particular high, and the worst response for it is this particular moment. The second high, did price break it? No, price not break the second high, so price not going to respect this other block here. So price going to go below it and then respect the next other block. So the same thing that happened here is going to also repeat itself here. So I'll be teaching this particular strategy on this channel, that every single time you see price break one particular high, don't make use of the other block, make use of the other block below it. So let me just delete this and then show you guys something there. So if you shade this particular area, you can see that price not break anything on the 4 hour time frame. Price not break anything, so price is not going to respect this particular other block. Price needs to go below it. This area right now is what liquidity. So let's just go down to like 2 hour time frame to see if you're able to see entry. So on 2 hour time frame right now, can you see that price end up breaking only this particular bullish candle? Can you see we have what, a break here? Price end up breaking this, and then price not break the second one. So this one give us full assurance that price is going what, below this particular area. So our other block is going to be below this particular other block. So we're going to set what our other block using this particular candle. So other block I mean. So this other block is what, a real other block, because price is going to respect it and then start going what, on a bullish trend. If you go back to like 4 hour time frame, you can see that price end up taking this particular low, and the price is here to give the 100% to go above this particular area. So if you want to like to set our take profit is going to be above this particular high. So you're going to set what our take profit here, that price is going to go above it, and the probably price is going to go above this particular high also. Just like to take this eye out of the market because it's liquidity, you understand. But for the sake of this video, we are going to like to setting our entry here. Okay, let's just set it here. It doesn't mean anything. So that's just for that. And then onto our time frame now. So I want to like to know how to get a snapper entry. You also like to be going down to the lower time frame to find a suitable place for you to enter into the market, a perfect entry. So let's go down. Let's go back to like to our time frame. So on 2 hour time frame right now, you have got this particular order block, and then price is going to go below this particular order blocks, because this order block is not what, a strong order block. So let's just go down to like 1 hour time frame. Let's check 1 hour time frame. So on 1 hour time frame, if you can check very well, you can see that this moment it end up breaking a lot of highs. It's one that broke this particular bullish candle here, and then this particular bullish candle. So this other block is what, a strong order block. You can see that price end up coming down to it and they respect it, but it's here to give what, 100%. But we're not going to like to put our full focus on this, because on higher time frame, price is telling us that price is going to go below this, you understand. And there's some traders which are like smart money traders. They will see this one as the margin now where price is going to like to return back to, so they're going to draw this particular order block out, and then they'll set their entry and then their stop loss below it. So immediately price is going to try to kick them out of the market. Price is start going was on a bullish momentum, and then it's going to be very fast, you understand. So that's just it. You're not going to like to put our focus on this particular area anymore, because on higher time frame you are seeing what, a play that price is going to. So higher time frame is stronger than lower time frame. So that's just for that. And then if you shade this particular area very well, we are on 1 hour time frame. You can see that this particular bullish movement, it ended up breaking this bullish candle here, this high, and also this particular high here. So this other block is what, a strong other block. So let's just go down to like 30 minutes time frame. So on 30 minutes time frame right now, you can see we have what, liquidity under this particular place. So we are going to reduce our other block using this particular block. So you can add the week and then you can ignore the week also. It all depends. So right now you can see that price, we have what, week candle here. So all these particular areas are liquidity. All these particular areas are liquidity. So retail traders are going to see this particular moment and then be expecting price to come back to this particular area, and then start to go out on a bullish trend after getting to this particular line. Bank doesn't recognize this. We've seen this as liquidity in the market. price can end up getting to this particular area and then do as if you want to go what on a bullish trend, and then at the end of the day end up kicking them out. The reason why price always do that is just like for them to enter into more position. So price will do as if you want to go what on a bullish trend, and then they enter more position into the market. At the end of the day, price will just come down suddenly with a very huge momentum to take them out of the market. So that's just for that. So right now we are on what 30 minutes time frame. You can see that this particular moment from this low to this high, it ended up breaking this particular high, and also this, and also this. So this other block is what is stronger than block, but we also like to be going down to lower time frame so we can get a perfect entry that price is going to. So let's just check 15 minutes time frame. So on 15 minutes time frame right now, we can reduce what our order block. Can you see? We can reduce our order block using this particular place, and then you can see that this particular moment it end up breaking this particular high here, and also this particular high, and also this particular high. This, yeah. So that is just for that. So this other block is what is stronger than block, and then you can see it's going to happen immediately when price top out retail traders, people that are trading, support our resistance, and then price is going to go what on a bullish direction, picking our trade, and then with a very huge momentum. So we can also go down to like 10 minutes time frame. Let's check 10 minutes time frame. Let's see, maybe we are going to see another block. So on 10 minutes time frame right now, we see what another block. So we are not going to like to make use of this particular other block because we have what fair value gap above it. Sometimes price can just come into the fair value gap and then start going what's on a bullish trend, and then the reason why price is coming down to this particular low is just like to take out all this particular liquidity on higher time frame, which is a forward time frame. So you're not going to like to be using this particular other block, but the most thing that I used to do most of the time, just like I'm going to measure this particular fair value gap, and then I'm going to make use of what the 50%. So let me just use Fibonacci retracement, and then let me measure our 50%. So you're going to like to be using 50% of Fibonacci retracement. We're going to be setting our entry there, because this fair value gap, sometimes price can end up closing all the fair value gap. Price can just tap into the fair value gap and then change direction. So on this 50% here, there you see. So this 50% line in between here, we have 50%. So we have 62 above here, this 50%. So this is where our entry is going to be. So let me delete this. Price is going to tap into the fair value gap sometimes, and then keep on going what's on a bullish trend. So you have to like to secure your trade, and then you can add week, you can set what's your stop loss here, and also you can use the body of the candle. It all depends on how you have to understand the market, but most of the time I always advise people to make sure they add week to it. So for the sake of this video, I'm going to like to be using the body of the candle. Reason just because what I'm expecting price to do is like to tap into this fair value gap and then start doing what's on a bullish trend, or just to tap into this order block and then start going. So I'm not expecting it to come all the way down below this bullish candle, this black candle. So I'm not expecting price to go below it. So that's how I'm going to like to set my stop loss there. So let's just set up what our entry. So let's set our entry. So we're going to set what our bullish entry, then we set our stop loss there, and then to set what our take profits are going to go back to like forward time frame, because that's where we get the entry from. Forward time frame to go set what our take profit. So on forward time frame now, so on forward time frame, this is where you're going to set what our take profits. We say you should use this particular high. And then because this particular high is not a strong high, so you can set what your take profit using this particular high, and also you can set it here. It all depends, you understand. Then if you check out the ratio is 1:23. Can you see risk to reward ratio 1:23? That means if you're risking 1% of your account, you're going to like to making 23%. So let's just go back to like 10 minutes time frame. And then let's play it out and then see what's happened. Before playing it out, let me show you guys something here. You can see that this particular moment it ended up breaking a lot of highs. This particular moment, bullish moment, it ended up breaking a lot of highs, and then price eventually respects it and then going what's on a bullish trend, but price did not deliver 100%. But on forward time frame now, we are seeing that price going to go below it, and then I think 30 minutes time frame and also this 10 minutes time frame, you can see we have liquidity here. So I made a video about liquidity. You can also watch the video out. I'm going to drop the link in the description, so it's going to really help you then to spot out where exactly is price going to. So right now you'll be expecting price to clear out this particular liquidity and then to tap into our entry and start going what's on a bullish trend. So let's just play it out and let's see what's happened. So you can see that price end up tapping us in and then change direction immediately. Do you notice something in this particular area? Immediately price tap into what? Get into support level, retail support level. A whole 10 minutes candle out to end up in what? In a bullish candle. There's a reason why this candle have to end up in a bullish candle, because a lot of retail traders are set to what? A buy position, you understand? And then it's going to decide then that price going what? On a bullish trend for them to enter into more position. At the end of the day, you can see that suddenly we have what? An impulse movement that end up breaking all the lows, because this way they're going to say their stop loss is below it. So a lot of funds are resting below it. So you can check out my video on liquidity. I've explained all these things there. So that's just for that. You can see that immediately price tap into what? Our entry. We have what? A snap entry here. Can you see? It's just some little people. Okay, this is where our stop loss, our entry is supposed to be. So you can see that price end up tapping into what? Our entry and then change direction immediately, because price is not going to give them any chance to enter into the market again. So price will keep on going what? On a bullish trend. So let me play the full video then to see if price eventually gets what? Our take profits. On price still moving. You can see that price end up tapping into what? Our take profit. Price end up tapping into our take profit here. So this one is entry. So that is just how to trade what? A snap entry. So let me just do a little recap before I end this video. How to trade a snap entry is so simple. The first thing you have to do is just like get your buyers from higher time frame. Once you get your buyers and you have a place that price is going to, or another block that I've set, which is a real and a strong order block, you can check out my video on how to identify a real order block. I made a video on it. So I'm going to drop the link to the video in the description. You can check it out immediately after this video. And then once you're able to identify a particular order block that price is going to on higher time frame, then you can go down to lower time frame to find another order block inside that particular order block, which is what? A strong and a real order block. So make sure you watch the video on how to identify a real order block, so you can also be going down to lower time frame to find a particular order block that price is likely going to respect or to retest. So once you get that, you can use that particular order block to set what your entry, and then price will come all the way down into that particular order block as a snap entry, and then go to what's your direction. So that's just for that. So if you find this video interesting, I'll appreciate you if you subscribe and then like this video. See you in my next video.